Alrighty, so my name is Robert Chastain, and we're gonna get rolling here. Sorry, it's a few seconds late. Welcome. It's going to be a practical option tactics class, and today we're going to discuss broken wing butterflies. And first, just have to walk through the typical disclaimers. I'm not giving any financial advice or investment advice. It's strictly educational purposes only. Please contact your financial advisor before investing any money with any of these strategies or topics. All right. I am new to BetterTrades. I've worked with one of the other instructors, John White, for about 2 years. And he asked me if I was interested in doing some teaching at BetterTrades, and I'm undertaking that as we speak. So I actually began my career as a mechanical engineer in the auto business, and I built a company and I sold it to a private equity group, and then I stayed on and we built 3 auto suppliers and took all 3 of them public and sold out of them. After that, I started a hedge fund called Platinum Capital, and I strictly used option strategies. I cleared that fund through Thinkorswim, and at some point I was hired by Thinkorswim to invest their institutional money. And actually, when we sold Thinkorswim to TD Ameritrade for over $1 billion, the institutional side of that was over $250 million. After we sold Thinkorswim, I took about 9 months off, and then a group from Merrill Lynch was pursuing me, and I finally agreed to join them, and I traded a derivatives book that was worth more than $400 million. So I left Merrill in middle of 2014, and I've just been back on my own, investing my own money since then, and doing some mentoring. So I actually do mentor some other traders, and just invest my own money and some family money. So that's really my background. And again, today's topic is broken wing butterflies. And broken wing butterflies are very, very interesting. I actually use them quite often, and I think there's a very wide spot for broken wing butterflies in anyone's portfolio. And what we're going to try and do today is cover some of the basics and the mechanics of broken wing butterflies. Now, hopefully you guys or actually, can anyone type in the chat window if they're familiar with broken wing butterflies? So give you a second to do that. All right, so the web shop admin, just know that I'm not seeing any additions to the chat window, and I still cannot see the question window. So broken wing butterflies, let's just get into it. A broken wing butterfly is the purchase of a closer to at the money vertical spread and the sale of a further out of the money spread with a wider strike separation. The options sold on both the long and short spread share a common strike, hence it would be the middle of the butterfly or the body of the butterfly, and then you have a wing on each end. So the common strike is the body, and the single strikes on both sides make up the wings of the butterfly, which hence why it's called a butterfly. Example, this is a SPX example, and if we buy something at the money, say 2050, and then sell the 2035, that is one vertical spread. And then if we go and sell the 2035 and buy the 2015, we have excuse me, 15 points wide here. This is our net position. This is the net positions. Obviously, we're 10 by 20 by 10, 15 wide here, and 20 wide here. And so really embedded in this balanced butterfly is another vertical right here, the 2020-2015, and we will get into that deeper at some other time and explain exactly what that means. Okay, so the BWD basics and mechanics of the butterfly. So a traditional butterfly is a purchase of a long put spread, and so this put spread here, let's just say it costs $1.70, and then we're going to sell another put spread out of the money, a put vertical, and it's we are going to sell that for $1. And the net of that, excuse me, is 70 cents. So risk is reduced by $1, and this is a balanced butterfly. So, and here's the thing with the a balanced butterfly. If this being the zero line or profit line, anything outside of this body of the butterfly, you are going to lose that 70 cents. And so if we look at Tesla with last night's closing, you can see a long put spread, and this is a $5 wide put spread. Last night would cost you $1,700, and a long balanced butterfly, a 205, 200, 195, and again, this is last night's closings. So I understand Tesla is up today. Actually, they're up $6.15 as we speak. Would cost $700, and there's for some people that's fine, but for me that's still too much risk, and so hence a broken wing butterfly. And now we'll walk into the broken wing butterfly slightly deeper and explain to you why I use them more. I very rarely ever use a balanced butterfly. Almost always have a broken wing butterfly or an unbalanced butterfly. And again, a broken wing butterfly is the purchase of a closer to at the money vertical spread and the sale of a further out of the money spread with a wider strike separation. The options sold on both the long and the short spread share the middle, again, which is the body. So again, we have our 2050, 2035, and then we sell the 2035, 2015, and we net out at 2050, 2035, 2015, which our top strikes that we own are 15 wide, and our credit side is 20 wide, which leaves us really with $5 of risk. Now, what are really the purposes of broken wing butterflies? One, it can be used completely separate by themselves, merely as speculation. If you think a certain stock or index is going to settle at a certain level, you can put on a butterfly with the sold strikes at that level that you think it's going to expire. That's one. Two, you can use a butterfly to hedge stock, to hedge an index position. If you do some collars, you can use butterflies to hedge long stop very cheaply. And that is another strategy that I use very often. And then thirdly, you can use butterflies to hedge risk. If you're a seller of puts or put verticals, you can layer a butterfly over top of it to actually protect a vertical spread, and it's very, very powerful when you overlay and layer multiple butterflies over a group or a number of sold put verticals. So it's a very very flexible and very powerful used correctly. And now on the other hand, let's go over some of the strengths and weaknesses of them, because there are some downsides butterflies, and those weaknesses need to be discussed and known before you put one of these trades on. So, 3 problems with the butterfly. Excuse me. If a balanced butterfly is costing a 70-cent debit, broken wing butterflies, when you put those on, are much cheaper. They're either excuse me, free or put on for credits, and I don't mean free. Let's call it even money. So you aren't taking, you're using margin instead of a debit to put it on, or you're paid a credit to put it on, which it's a very efficient use of your capital. So most balanced butterfly spreads expire worthless, right? So BWBs close worthless most of the time if nothing is done with them by expiration. So the one thing that we'll show you in the broken wing butterfly class is how to extract value out of a broken wing butterfly before it expires worthless. And that's it's just another way to bring in income after you put these butterflies on. Thirdly, the butterfly has to close in that range to make money, and the range is usually pretty narrow. So broken wing butterflies can make money if the market moves in the right direction, or sometimes if it doesn't move, or even if it moves in the wrong way, as long as it doesn't, as long as it doesn't move too far. And again, we will cover all of the pros and cons to each type of butterfly in the 3-hour class that is coming up and on the BetterTrades site. Now, a basic butterfly, we're going back to the SPX right here. So you buy, this is just a way of looking at a butterfly, and it's just a very visual way that you can see it. So if we buy the 2050, sell the 2035, and then buy the 2020, this is a balanced butterfly. And you can see that we can put this on for a 70-cent debit. And now, if for us to make this a broken wing butterfly instead, it's very, very simple. We will simply move the bottom strike over one, and we will buy that. And this very similar butterfly is put on for a 10-cent credit instead of a 70-cent debit. Now, we are creating 5 points of risk here that is far out of the money, and everybody themselves as an investor has to decide if that risk is viable for them. For me, it's kind of a no-brainer. And if I can put something on for a 10-cent credit versus 70-cent debit and still be in the ballpark of a range that I want some coverage on, I will almost always use a broken wing butterfly. So let's just look at the normal distribution curve of a put broken wing butterfly, and it's very interesting. So this is a normal distribution curve, and if we throw in a risk graph of the broken wing butterfly, you can see our peak is below the average expiration of the distribution curve, but we're inside of the 68%. So we have the green lines is our profit, and you can see on a bullish note, we're always going to be profit if we put this on for a dime credit, but we do have some risk to the downside. But our downside risk doesn't start until you get out of the 90% range of the distribution curve, which if you supply to statistics, a 90% things in your favor is a very, very good edge, which is why a lot of traders use the broken wing butterfly. If you can set these up and look at them that way. So one other way to look at these is the actual red line is when you put the butterfly on, and the blue line is 2 weeks after you put it on, and you can watch the theta decay which is another strong portion of the broken wing butterfly. As theta decays, the actual butterfly will increase in value because the area that you sold, the strike that you sold, you have twice as many of them, and they decay faster because they're further out of the money. So here's the lose one time up here, and then you're selling twice as many of these, and you're buying one of these. So you can see if we have two of these, it's much larger than the two that we've bought, the actual distance. And then after the 2 weeks, you can see what the value is. The value of the one that we own is still this large versus what we've sold, and hence why a broken wing butterfly can be taken off for a credit some instances after a week or two of theta decay. It's a very powerful strategy. And again, coming up, we're going to have a weekly Thursday night class that's going to be covering 4 different strategies, this being one of them. We've already gone over or had a free preview of risk reversals, our rolling thunder, hedging techniques. This is the broken wing butterfly, and then later this week we'll be covering collars. And it's a dynamic collar that we use. We very rarely ever use the standard static collar hedging strategy. The other thing that we have a textbook for each one of these strategies, and really highly suggest that if you do plan on taking these classes that you buy the textbook, because we will be teaching almost directly out of them, and they're very current. They have current examples, and we will be using them extensively, and it's really a good piece of material for you to have later on study. You can go back and reference and go over the actual things. Now, every Thursday night at 7 p.m. Eastern, we'll be having a practical option tactics class, which can go an hour, can go an hour and a half, could go 2 hours, depending on what's going on in the markets and what we're covering. But the other thing that I'm going to do is put on paper trades with all of these strategies, and all of these students that want to follow along can. And we will be covering all of these live paper trades during these Thursday night classes, going over, why we put them on, when we put them on, what were the conditions, because every strategy doesn't work for every market condition, and we will be explaining what market conditions are currently and what strategies work better for the current market conditions. So hopefully you guys can tune in for that Thursday night class. It should be interesting. And then for each one of these strategies, we'll be having a 3-hour rollout class that'll be for every strategy. We will cover for 3 hours. It'll be more intensive. And then after the 3-hour class, we will be heading into the weekly Thursday night class, and be able to cover all 4 strategies in the Thursday night class. And again, so you guys know, we do have books on all of these strategies. Just contact the BetterTrades office, and we will be able to get you a copy of them and get you signed up for the classes. The other thing that's really interesting about these books, I just want to go over this again, it's really, all of the books are going to have step-by-step criteria for each strategy. And for any of you that are very detail-oriented like I am, again, I've said my background was in engineering, so I really like things to make sense, and I like to understand everything in depth. There's literally going to be a pilot's checklist for every one of these strategies. And it's something that you can run yourself through until you're very, very comfortable with them. Basically a checklist of everything that you should be looking at before you put on any of these strategies and or adjusting them. So should be very, 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 very good for you, and should increase your profitability in trading, and definitely knowledge of when, where, and why to put on certain strategies in certain market conditions. Now, right now is when I would be taking questions. And again, if any of you guys want a copy of these slides, you can email me at robert@monarchcapitalgroup.com, and I'd be happy to send them to you and or answer your questions if you have any questions. Because I still, unless you guys can put your questions in the chat room, I cannot see the questions currently. So I don't know from our admin, the BetterTrades admin out there, if you can see any questions, but I can't. Okay, the price, the admin just sent me a question. The actual price of the 3-hour intensive class is $395, and the actual practical option tactics paper trade along with us is going to be $395 per month. So the actual 3-hour intensive class will be $395, and we will cover each strategy separately. And then for the practical option tactics, we will be using the strategies and putting on paper trades, and you'll be able to follow along in real time. So the second that we do something in the market, you will get an email and or text, and you will know that we've either put a position on, taken one off, or made an adjustment to a current position. And then we will recap and cover all of those reasons why in the Thursday night classes. The actual books for the strategies are going to be $399, and you can contact the BetterTrades office to ask them about getting your copy of it. Are there any other questions? I don't see any other questions. So if there are any other questions, I hope to see you guys online soon. And again, we have another free strategy class that'll be on Thursday night at 6 p.m. Hope to see you there. Other than that, I'm going to sign off. Take care, and thank you for coming. Again, if you want a copy of the slides, please email me at robert@monarchcapitalgroup.com. Take care, and thank you for coming.